Start recording. Okay, so welcome again, everybody, to our financial advisory webinar series. So for those of you who don't know me, that's myself, and I am Tanya Hills, a certified professional bookkeeper, and I am the founder of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. So a little bit about myself. Again, I'm not going to go through all of this because there's a lot of accolades lately, but we were recognized as Intuit's Global Firm of the Future for 2018. We were runner-up for Canada in 2017, one of Practice Ignition's top 50 women in accounting in 2018, and we were actually one of the winners of the 2018 Inspire Bookkeeper Award. So that was a pretty big deal as well for that. So thank you for everybody who voted for that. And then the biggest accolade, I guess, that we've got is our Bookkeepers Bootcamp, who most of you know us for all of that as well, too, that actually qualified for 24 continuing education credits in 2018. So that was a really, really big deal. Okay, so let's just move on here. So today, so this webinar actually has been submitted for CE credits. So we haven't gotten the response back. It does take a couple of weeks. And I know through summer with people on vacation, it can take a little bit longer. So we're going to go on the assumption that this will receive the continuing education credits. So there will be 2 polls that must be answered in order to qualify for the credits. The recording of the webinar, sorry, I thought we had put our phones on Do Not Disturb. So the recording of the webinar will be emailed within 2 days, and certificates for your continuing education credits will be emailed within 2 weeks, unless there's a delay with us receiving the approval, in which case, once approved, they'll be emailed afterwards. So today we have Cashflow Frog. So there's our schedule, and so yeah, we're lucky enough to have Ariel from Cashflow Frog here with us. So what we'll do is we'll let Ariel take over. Ariel will do a screen share and take over, and I'll just basically pop in just for the polls and maybe to help with the FAQs at the end. If there's any questions, feel free to put them into chat or the Q&A, and I'll actually be watching through there and try to answer either what I can live, or if there's something that I can't answer, we'll just mark it and we'll address all of those during the FAQs. Okay, so I will mute myself, and then Ariel, you can just share your screen and take over. Then we'll have to unmute you as well, too. Thank you.
Tanya?
Yep, perfect.
Hi.
Awesome. We can hear you. We can see your screen. So that's great.
Great. So thanks so much for the invitation.
Okay. Yeah, thank you so much for joining us. We're quite excited about this.
I'll be happy to share some information, and please, with any slide, I'll be more than happy to answer questions or even get insights from you or the audience.
Perfect. Now, one thing that actually we've been asked at the other 2 webinars, so I'll just ask you right up front on this one, will we be able to get a copy of your slides that you can even, upload into Google Slides and send me a link? Because I can't attach attachments to the Zoom emails, but we can do a link. Is that something that's possible?
Yeah, of course. So I sent you a few minutes ago the presentation, so you can share it.
Perfect. I'll just upload that, grab a link, and share that out with the other information you gave me. That's awesome.
Okay, thank you very much.
Thank you, and I pass it over to you.
Great. So a bit about me. I'm a CPA. I began my career in audit and then financial consulting. Did my internship at EY, and then I left the company and started consulting on my own for different sectors, high-tech sector, many small businesses, and provide them some different services. And I think at that point, the most common one or most common questions or requests I got from the business owners was related to cash flow. And so at that point, I was looking for a better way to do it, except for spreadsheets, which is manual labor. And the time I used to finish my spreadsheets, I didn't have any energy to analyze the reports. So at that point, I started working about the cash flow software, Cash Flow Frog, with my co-founders. So why is everyone obsessed with cash flow? Because we have a P&L, we have balance sheet, we have for every business, have like a lot of different financial KPIs, but I think the basic one that from my experience, and I'm happy to have insight from the audience as well, always started with cash flow. And my take on that, because if cash flow is tight or if cash flow is going to be problematic in the near future, the entire company freezes. And the entire focus of the management on the owners is how to get the cash, the line of credit, or that loan. And the company, instead of focusing on developing the product or sales or improvements, is dragged back or frozen. And I think a second thing about cash flow, a lot of business owners are very, very smart at what they do. They develop new products, new services. They are, the best in sales. But when talking about financial aspects of the business, so a lot of them, from my experience, either don't like to handle the numbers, hear about it. So I think this is one of the biggest opportunities for any consultant, is being the number guy. First, knowing how to answer the questions, and second, to help them plan ahead. And cash flow, from all of the different reports that business owners can request, is pretty basic one, because everybody knows the meaning of cash flow before they know the meaning of a balance sheet, before they know the meaning of P&L, of how to become more profitable, and any different KPIs. So cash flow is pretty basic: cash in, cash out. That's what I have in the bank at the end of the month, or end of the day, or whatever time period. And let's just, okay. So which type of businesses are mostly struggling, and which one I think will need more attention from you as an advisor for the company? So first up is service-based companies. Companies that sell some kind of service, and most of the operational costs are payroll. Because payroll is pretty strict. You have to pay it in certain times. You cannot be late. You don't have a chance to be late, but your clients can be late. So usually in this type of businesses, when you have to pay on the same periods, but revenue may be based project, or even per monthly retainer, but not everybody pay on time, cash could be very tight. Second half of businesses, which probably need help with cash flow planning, it's when the margin is very small. So every change in COGS or operational costs will affect the cash balance. Third, growth. And when a company is growing, and when you give credit terms to your clients, cash will be tight. Next, type of businesses that used to have, or used to give long collection period, because maybe the business owners doesn't take too much attention for it, or it could be industry-based. Certain industries pay 30, 60, or 90 days late, so this is the industry. And so you have to keep the cash aside. When you have to invest in inventory, companies with a big amount of inventory, which is a big investment for them, also are most likely to have cash flow issues. And last, seasonal. When you have summertime season businesses, but most of the operational costs are high or fixed the entire year, so cash flow will be tight in those periods, in the low seasons. So how can you win your customer satisfaction? From a lot of talks with a lot of customers, and also advisors and accountants and bookkeepers, how can you win the customer? What will keep him satisfied? So I think also heard it last week and heard a lot. So be the first to know. You as an advisor, you are the first one to get the numbers, to update everything. You are the first one to know anything. So this is a great advantage for you to be the first one to tell your client, hey, next month it's going to be X, Y, or Z. You should do accordingly those steps. So you're the first one to know. And this is an edge and a value that you are the only one that can give it to them. And next, you have to find out where are they going, where they want to reach. So if they want to invest in a bigger office, hire more staff, or in advertising. So you can help them plan how to achieve this goal and how it will affect the future bank balance. I think the first two, if done properly, will give the client a peace of mind. So everyone wants peace of mind, because I think two things that everybody will probably miss sleep or be stressed about. First is health, that we can't help with that. And second is the cash flow. So if you think you're going to have cash flow issues, it's going to be problematic for everyone. But when you know what's going to be next month or 2 months from now, and even if it's going to be tight and you can plan ahead and take the line of credit or take that loan or cut some of those expenses, you got a peace of mind. And I think the best benefit that an advisor can give a business owner, the peace of mind that know that he got a guy or a service that will help him with those issues. And next, repeat. So all of these steps can be repeated on a weekly or monthly basis. All depends on how your client would like to plan ahead. Tanya, are there any questions so far?
Nope, no questions so far.
Okay.
Did you want me to launch the first poll now, or do you want to wait?
Yeah, so the first one can be great.
Perfect.
Thank you.
Awesome. Okay, so you should all be able to see this right now. So again, both polls need to be answered to get your CEC credits. So what percentage of your clients are struggling with their cash flow? So less than 25%, 25 to 50%, 50 to 75, or more than 75. So we'll give a minute or so for everybody to get a chance to vote. And we're at 60% voting right now. So let's give everybody probably another 15 seconds or so. So again, less than what percentage of your clients are struggling with their cash flow? Less than 25%, 25 to 50, 50 to 75, and more than 75. So we've slowed down and we're at 83%. So we'll count down here 10 more seconds, and then I'll close the polling. So we'll go 5, 4, 3, 2, 1. All right, perfect. So I'll just share the results. So most people are 25 to 50%. Okay. And that probably seems about right for me. I don't know, what do you find, Ariel? Does that seem?
Yeah, so, yeah, very reasonable. So I think most are probably 50%.
Yeah, okay, perfect.
Yeah, so thanks so much.
Great, thank you. I'll mute myself again, and yeah, but like I say, no questions so far. So
thanks.
Thanks.
So what is Cashflow Frog? So we developed an app that pulls the data from QuickBooks desktop versions or QuickBooks Online, and basically creates a forecast for you. And we'll see the product in a few seconds, but let me just switch. So our app is working on a direct method cash flow. So just given 2 short examples. So for every financial statement, that usually the audited one, you have a cash flow statements in it. So it's an indirect method. So in those reports, you have the P&L bottom line, and you see revenue 500K for that year. But of course, mostly the cash change during that year will not be 500K, because you have accounts receivable and accounts payable and other different kinds of balance sheet adjustments. So the example I just gave was an indirect method, taking the P&L report and trying to adjust it. So this is usually done for audit purposes or financial statements, and it's a great view when you look backwards, what happened last year, 2 years ago, and in historical time periods. But for cash flow planning, the most common and reasonable one to use is direct method. So direct method is booking or recording any transaction that involves cash. So if I sold something and I collected, so only once I collected the cash, only then I booked the revenue. And only when I pay, payroll or whatever, so only when the cash leaves the bank, only then it's a cash flow transaction. So the direct method is easier to understand for everyone, especially for business owners if they don't have any financial background. And second, it's better to use it for cash flow planning far ahead. So our customer base is split between business owners that use the software themselves because it's pretty straightforward. And second, a lot of advisors use it to plan their clients' cash flow and help them for exactly those 50% which are struggling and need assistance with the cash flow. So I think this is one of the great benefits of advising, of you being the first to know, first to update the data in the QuickBooks or QuickBooks Online, and can see how it affects the future cash flow, and share this information and those reports with your clients, and give them the insights and the actionable insights which they should do. So 5 different reasons why anyone will use cash flow forecasting at all, and this is actually based from surveys from our clients. So the first one, I think this is the common one of stress. You want to identify potential problems far ahead. So the same example I just gave earlier, I want to know what will happen next month. Will I be able to pay payroll and all of my liabilities? Or what are going to happen 2 months from now? If I'm going to be tight or in the red line, I'll be able to plan ahead and take reasonable, again, loans, credit line, and so on. So this is for potential risks. This is for investments. I want to invest. More staff, bigger office, inventory, advertising. So for any one of those investments, of course, it's going to change my cash balance in the bank. So will I be able to support my liabilities once I do that? Next one, analysis. You want to analyze your company. So a lot of the times you have like a time period of last month, and you're not sure how much you spent on what, cash flow wise. So you get a clear view of what happened, and you want to see a breakdown out of it to properly analyze it. So analysis. Next, visualize. No, I love spreadsheets and I love tables and so on, but most of the people don't like it. So for those who don't, or even for me, seeing stuff visualized and see a graph line, it's much easier to comprehend and understand. Next, you create those forecasts, you create those reports, and you want to share them with other management, shareholders, and so on. So this is the 5 main reasons to plan ahead and use Cashflow Frog and Cashflow forecasting. So I'm going to switch now to a demo company. Okay, Tanya, do you see it?
I just see still your PowerPoint.
Okay, so now?
Oh, here we go. Yep, perfect.
Okay, great. So now I'm going to show you what happened for the first time that you log in. So you simply go to our website. We have a start free trial. And once you do that, like 30 seconds later, you reach here. So this is the first screen you see, and this is the main screen you see. And everything which we see till now, it's automatically pulled from QuickBooks or QuickBooks Online. So I just logged in. I can see I'm in scenario 1. You can create different scenarios in the product, and I'll show you later. So every time that you log in, you can see the cash flow metrics bar on top. So this is my cash on hand. So this is my cash balances as pulled now from QuickBooks Online or QuickBooks. Just I must emphasize, this is a reconciled bank balance coming out of QuickBooks. So I can see my balance for each account, and I can choose which accounts will be part of my cash flow. So in this example, the savings one is my savings for long term and not my operational cash flow, so I just decided not to include it. Next, I can see my credit cards. So this is my balance, my outstanding balance for each credit card. And again, I can choose if to look at them as credit cards or as part of my cash on hand. So it all depends on how the company likes to see the credit card debt. And next, we have the bills and the invoices. So what we do, we can see here, this is all of my outstanding bills. And for each and every bill, I can see the due date as pulled from QBO. And you can see the expected date. So by default, we take every new bill and place it in the forecast based on due date. So for example, if Tanya will issue me a bill today due on September 2nd, I will enter it, it will enter into QBO, pulled into here, and I will see my outstanding balance to Tanya, and it's supposed to be paid on September 2nd. All of these expected dates can be edited. So for example, I have this one, which is due on October 5th, but I think I'm going to pay this vendor only on November 6th. Save it and change. So it will reflect in the forecast on in November 6th. All of those balances are automatically updated. So for example, let's take this one. So if I'll pay partial payment tomorrow, so once it's reconciled in QuickBooks Online, and the balance will decrease to 2K, so my outstanding balance for the bill will be 2K accordingly. This is for the bills. Invoice is exactly the same. So every time that I issue a new invoice, it automatically goes into the forecast. The default setup is due date. I can also set expected date rules, okay? So let's take one of your clients, and let's say that this company, a great company, but they don't have like a strict collection process, and their clients don't pay on time. And in average, they pay 10 days late. So what happened is every time that I issue a new invoice, it will go into the forecast based on due date plus 10 days. And these are estimates. So for companies that use estimates in QBO, you can also pull estimates and put them into the forecast. So it's an optional, you can disable them. Or some companies just generate estimates and never close them. But we just take the outstanding estimates, the approved ones, and the pending, and put it in the forecast. And you can disable the non-relevant ones or edit amounts. And of course, once an estimate is converted into an invoice in QuickBooks, it will be closed here, but it will be open in the invoice in outstanding invoices. So far, keep in mind that every time that something happened in QuickBooks, bank payments, transactions, you generated some new invoices and got some new bills, the forecast is updated on a rolling basis every day. And next, so far, this is the historical cash balance. And in the forecast, till now, we have the bills and the invoices, which are automatically updated based on your QuickBooks data. And so are the estimates. And next, you have the projections. And what are projections? Projections are stuff that are likely to happen in the future. You can enter them yourself. So let's take, for our example, that you want to pay minus 2K, payroll. All of these account types are automatically pulled from QuickBooks Online. And it's going to appear in this company on a bi-weekly basis starting Friday. And I'll enter another one also for cash in. So it'll be like $500. from Tanya. Hope it's okay. So some kind of services. Put it under sales. And it's going to repeat on a weekly basis, for example, and add those projections. And once I enter those projections, it will update the forecast. And those projections for example, this one. So this is a repeat every week on Tuesday. So any one of these projections by default will be deleted on the same day they're supposed to occur. So let's see it here. So this is the $500 that's going to repeat every week on Tuesday. So on August 20, this item will be deleted. And the reason is that on August 20, the actual data from QuickBooks will be pulled in. So, and these projections will be deleted by default. So again, so the bills and the invoices are updated, and you have the projections in the forecast. And once the today has moved forward, those projections will be deleted. So on a running basis, the forecast is always updated. Now we just saw it on a daily view, a line basis graph. You can also see it in a bar line, which easier to see is cash in, cash out for every period and the bank balance. Let's change it to a monthly view, which would be easier. And you can also see the table below. And for every number that you see, and you want to analyze, okay, so I have here, for example, $2,900 for Office G&A, and I want to know why. So I can simply click and drill down and see which transaction. So this is a projection that I entered. Next, and this is one that I like most, is cash out. So this is a pie chart because I guess most of you get this question a lot. So I don't understand where all that money went. So we can see for in this company, in this time period, I spent $160K. And this was the amount spent on payroll, $79K. This was for advertising, rent, office G&A, supplies, and other. So it's a great way to just give a snapshot of what happened in that time period. And for any one of those transactions on those types, and you want to see why, you can simply click and see which transactions. And you can also see it for the cash in pie breakdown. And this is a transaction table. You know, sometimes I want to see all transactions day by day, a lot like a bank statement, and you can see for each date. You can see the source of the transaction, and all historical data is coming off the QuickBooks General Ledger. And you can see the type and details and the amount and the balance all the way till today, which is the actual balance, which we saw earlier. A cool feature, so let's see in my historical transactions, and I can see, okay, so I get from this client below 380, and I think it's gonna repeat itself. So I can simply duplicate it and turn it into a projection. So it's already filled. And I can click of a button, add as a projection. And now I'm gonna go back here and to the balance. Great. And change it to a weekly basis. Okay. And now let's look at the table here. So in this table, which also gives you a great snapshot, you can see for each time period, in this one is weeks, I can see my opening balance for the week, how much I generated, and how much I spent, and my closing bank balance. So again, it's really easy to understand what happened in any time period. Next, so I'm going back a bit. We mentioned that the forecast is comprised of the outstanding bills, the invoices, and the projections. And we enter two projections on the top, from the top of our head. But, 1 second. We have an algorithm that looks for transactions in the history. And when we see transactions that we think are going to repeat itself, we suggest them for you. And you can see those suggestions. So you can see any one of them. And in a click of a button, or I can change them, I can enter them as a projection. And you can see how my graph changed. It's not in the red anymore. So the entire step that we just did was updating the forecast for this company. And again, everything is automatically updated anytime. You can sync. The default setup is update every night, but you can click and sync it to real time. And once I update the forecast, so it's, I think 5 minutes from the moment we started, you can analyze and see what's going to happen. And now that you have like the base scenario, you can create a new one. And in a second one, it could be like a pessimistic one. What happened if the big project is going to fail? What happened if some of these invoices are not paid? And you can see how it decreased here. And you can add different projections. I don't know, minus 15K for, I don't know, some kind of project that you have to do to keep your business. And the inventory, non-recurring. So I got this scenario, which is pessimistic, or what happened if, and so this is one thing that you can show your clients what happened if any one of those assumptions are going to happen. And you can switch back and forth between the scenarios, and each one of them is standalone. And you can, again, see how different assumptions and different scenarios are going to impact your future bank balance. So it will help you plan, should we take another staff member? Should we move to the bigger office? Should we invest in advertising? Or should we do any one of the stuff? And let those scenarios run side by side. Okay, so this was a pretty basic overview on the cash flow planning. Next, we have a customer insight screen.
I'm actually sorry, before we moved on, Ariel, if that's okay, because there's been a lot of questions that come in.
Sorry.
Pretty much it would be on, kind of on this, so before we changed over, if that's okay. Okay, so just kind of so that I don't lose track, because some people are putting them in chat and some are in the Q&A part. Q&A is a lot easier to track, so just bear with me here. So what we've got first off is, so I'm going to answer the ones in chat first so that they don't get lost, and then I'll move to the Q&A questions. So one person asked, so how does that work when the sales go to a deferred revenue account and then move gradually to income?
Okay, so what question is it?
How does it work when the sales go to a deferred revenue account and then gradually move over to income? So how would that work within your scenario?
Okay, so it doesn't matter. Once you got the cash in the company, it's booked under sales. So it doesn't matter if you later, or accounting wise, book it as deferred revenue and then reverse it every time period based on the specific company revenue recognition. Once you got the money, it's cash in, it's booked.
Okay, so this is based on it. Again, it doesn't matter what's sitting there. This doesn't look at AR. It looks at what is your cash in your.
Exactly. So this is the direct method. Exactly.
Perfect. Okay, and then can we track ratios?
Sorry, can you track?
Yeah, can we track ratios?
Ratios? Which ratios?
I don't know. She just says, can we track ratios? So Dominique, did you want to maybe expand on that? Financial ratios.
Currently, no, but as you can see, we have the customer insight screen, which I'll show in a second, and we are going to add some more insights into it. Yeah, so it's going to have some more features in it.
Okay.
Currently, we only see, you'll see what in a few minutes the customer insight screen, but we'll add additional first KPIs and also notifications about them for the clients. It's actually one of the features being developed right now.
Perfect. Okay, great. So there's still a few more here. So Dominique says one of my biggest issues with small owner operator services, or based services based, or the micro business owners, is for them to understand their corporate bank account is not their personal piggy bank. I hear you on that one. So she'd like to help them understand and forecast their AP, tax, and cash reserve requirements. So these are very financially unsophisticated trades and technologists, and she would like to help them think in terms of month, quarter, year, and 2-year horizons. How can Cash Flow Frog help her with that?
So exactly, you can just show all the reports we just saw in any kind of time period. So it could be weekly, monthly, or so you can go 2 years ahead. So you can show what's going to happen based on those AP and tax and other liabilities on the long term, and how much cash they have to generate to stay above the line.
Okay. And yeah, and she might have put that question in before you got to that, because again, we're going back to, I was letting them build, and then I realized that they all have to do with your scenario. So, okay.
Yeah, so I see your demo account shows scenario 1.
Yep. Yeah.
So you can have like multiple scenarios. You can analyze or make different assumptions, up to 10 different scenarios in the Pro plan. So don't worry about it. You can try anything, any kind of assumption.
Okay. Yeah, so then the next one, do the changes you make, like changing the due date in the app, feed back into QBO? I would think that no, it wouldn't. It would just stay within your
Which
scenario.
one? Sorry, I lost.
Any changes that you make, like changing the due date?
No, sorry, I didn't explain it. So we only pull data from QuickBooks and QuickBooks Online. We never pull back anything.
Okay.
So I think the best part of it, even if your clients will log in here, and because it's really straightforward and really simple, say even clients that will never go into QBO, or you don't want them to go into QBO because they'll mess things up, they will never damage your QuickBooks. So nothing that you do here will never impact your QBO account.
Okay. And that makes sense. Most of the apps seem to be doing that. They're pulling, they're not pushing back. And that makes sense. So that way you can play around with your scenarios, right?
Yeah, exactly.
Okay. So the next one, can you save the projections as a named scenario so that you can rerun and track that over and over again as your times change? So can you template it?
Yeah, so the projections are saved, and you can, when I mentioned earlier, when I'll show you.
Okay.
For example, this one, I'm gonna see $500 every month. So on this coming Tuesday, which is tomorrow, this will be deleted, but we'll still have the next one in the series. So it is saved. And even you can see I have all projections here that I just disabled, but I can just put it back in, update it, modify it, change assumptions, and that's it. So it goes back into the forecast. So you can, of course, play with it.
Perfect.
And
okay. Okay, so the next question is,
so that, is it that, sorry, Tanya, would you like
sorry.
to go ahead? So yes, we sync with QuickBooks Desktop. Simply start from our website, follow instructions, and it will help you on board. And so Dominique asked about the cash flow report. So yeah, so it's that simple. So the same line and the same stuff that you see here, I think anyone will understand, and anyone will understand how a projection or update to the invoices and bills or stuff that already happened in the QuickBooks will update the forecast accordingly.
Okay, and then just quickly to this one from Marie, do recurring transactions that are saved and scheduled in QBO feed into this app? I would think that that answer would be no, because they haven't happened yet, and this only pulls the actual data of what's happened. Is that right?
Exactly. So once you set up a recurring invoice or a bill in QuickBooks Online, only when the same day arrives, only then accounting-wise it happened. So same as Tanya just said, only then it's booked in QuickBooks Online, and only then we get the data. But, for example, so if you got a specific bill that you set as recurring bill or a recurring invoice in QuickBooks Online, and you don't have the info yet because it never happened, you can simply turn it in as a projection, set as a recurring bill, as a recurring invoice, same as I did here, the $500 earlier, this one, and it's in the forecast. And once the actual day arrives, this item will be deleted, and the actual one will be coming out of QuickBooks.
Okay. Okay, perfect. So then Dominique says, how can she make the cash flow reporting simple? So, and I kind of agree with her that sometimes when we pull all of our reports, you know, that we understand it, we get it, but our clients don't, because that's not their job, especially the ones that are in trades, right? So their eyes kind of glaze over when we show them tables of numbers. So is there a way to make it simple? Like maybe even, I guess, a little more visual, or kind of, I don't want to say this, but I kind of lack of a better word, almost dumbed down, or again, very simplified?
Yeah, I will show you in 3 minutes.
Perfect. Okay, so we'll wait for that. And then just the one final question, and then I think we can go back on and we'll pause all other questions. Still type them in so that way we can get to them, and that's great. So can you illustrate how you use the different scenarios function?
Yeah, okay. So this is a scenario that I just generated with your help. Based on my knowledge, let's say I'm this business accountant, a bookkeeper, advisor, and this is what I think is going to happen from my past, from my knowledge of the company. But I don't know what's going to happen in the next few weeks because we have some issues with a big project. So let's generate a new scenario, and let's call it pessimistic, okay? And let's just call it for the webinar, okay? Webinar. And it's a new one. I can copy from one of the existing ones, so just create a new one from scratch, but I'll create from scenario one because I already have some assumptions in it. So we see currently the same forecast that we just saw in scenario one. And we'll go into this one, and I just heard that you have a dispute with some of the clients, and I think that this we are not going to get paid. And this one, because the project is late, we're only going to get them in December. And this one as well. So first we see that my outstanding invoices balance just decreased with any change. And now we see that all of my collection, which was supposed to be here in October, we're going to change to a monthly view. Only going to be in December or later. We're going to change the time frame. So only December is going to be. So what happened in this time period? So I know that in October I'll be like minus 45K. And let's say that I can go into minus 20K. So now I get a 25K somewhere. So in this projection, I know that I have to take a loan. So I will advise my client to get a 25K loan only to stay alive for that time period. And I have a loan account, and it's not repeated, it's one-time event, it's 25K. But let's say I'm going to pay back sorry. And this is going to repeat on a monthly basis starting September 20. And till, I don't know, April 2021. And just added those projections. So now I'm only minus 22K, so it's not enough. Let's update the loan to 35. Save it. So now it's better. And I can see the loan and the loan repayments. That's it. So this is one example of a different scenario, and you can have like another one with any kind of assumption.
Okay. Great. There's a few more questions, but like I say, you can keep going through your customer insights, and then we'll circle back to them.
Okay, great. So customer insights. So this is actually a great screen that we built it based on a lot of talks with customers. So what we can see for the last 12 months, how much I sold each month and how much I collected. So you can see those differences between sales, which is always great, but collection is better. So you can see every time which it doesn't match, and you can see how your company performed for the last 12 months. And you can see for each and every customer, how much I sold to him, how much I collected, how much credit days I gave them. And those credit days are calculated based on invoice date, due date minus invoice date, and collection days, how much time it took them to pay, actual payment date minus due date. And we give them scores based on that. And you can click and drill down and to see those transactions from each and every customer. And this is the same report per customer. So I know a lot of the companies that have collection issues like to review this screen, talk about it with the collection manager, or even with customers. When you have to set up payment terms to specific customers, we can see which ones are pay according to the terms and which one are always late. And maybe they should be paying a late fee or higher fees. So this is a customer insight screen. And next, and I think it's a great feature, I like it very much, and actually it's a new one just released last week. And you can create reports, and actually you even can save them. So I'm going to create a report from scenario 1. I'm going to name it just Tanya webinar. And I can write my description, but you can write something more meaningful than webinar, and create a report. And this is my report editor. And I think the most important, first you can choose what data you want your client to see. So you have all of these different views, but you can take it like in baby steps and first only show them the line graph, and then from each period show them another one, or different reports and from different time of the month. And you can write your assumptions. So assuming this scenario, assuming the company get paid on time, finish project A week late, customers pay on time, and so on. Or even if it's a pessimistic one, what happens if we lose that lawsuit, have to pay, and etc., and other examples. And each one of those reports, you can write anything. And you can tell your customer what the assumptions are based on and what you want them to understand from the report and what do you recommend for them to do accordingly. And this is the cash flow breakdown and the cash balance and the pie charts that we just saw. So it's actually all the views that we saw earlier and the customer insights, and you can choose which one to show or not. So at first, it could be like a minimalistic report, only this graph, which I recommend, and the pie chart, cash in, cash out. So it's, I think, the best way to analyze and see for the business owner that doesn't want to see too many numbers and too much information, because not everybody like too much info. So you can choose to show them only these ones, and write your entire assumptions on it and generate the report.
Nice. And you're right, and that does make it so that we can get rid of the ones that'll make their eyes glaze over.
Exactly, yeah. So for example, yes, sorry for interrupting. So yes, you can choose whatever, and I'm just going to show you the report itself. Sorry, Tanya, for interrupting.
No. Go right ahead. Sorry, I interrupted you, so go ahead.
Do you see the report now?
Yep.
Okay, so you can see it's a PDF report, and again, so even if you are a spreadsheet or numbers allergic, and it's quite common, you get those specific reports out of it, and you tell your client what he needs to see in each one of those graphs or pictures, and that's it.
Nice. Okay.
So I see that you have some more questions.
Yeah, so just before we go into the questions, I just wanted to launch our last poll.
Yeah.
That way, because if people have to go early, I'm okay to stay over time to make sure all the questions are answered, absolutely, but I want to make sure just in case people have to leave, that they can still get their poll in. So here's the second poll. So how often do you discuss your client's cash flow with them? Weekly, bi-weekly, monthly, quarterly, or never? And again, we need both poll questions answered to have you qualify for your CEC credits. So we're at, moving quickly. So we're at 63% already. Moving up quickly. So again, just to repeat, how often do you discuss your client's cash flow with them? Weekly, bi-weekly, monthly, quarterly, or never? So we'll give about 10 more seconds here. Do a countdown, give everybody minute here. So 5, 4, 3, 2, 1. Okay, so there's the poll results that I'm sure, there we go, you should see them now. So most people are monthly. There's some that are never, some that are quarterly. But yeah, most seem to be monthly of the groups on the call. So that's good. I know here we try to aim for that, but I'll tell you that's not happening. A lot of clients don't have the time for it. It's just a matter of retraining. And we plan on, once the series is over, doing a re-onboarding with our clients and trying to get them there because it's really important. And I think the big thing is, too, having them understand what they're seeing, with stuff like this versus, the traditional reports, the P&L and balance sheet and cash flow statement that we pull from QBO. It makes a big difference when they can see something visual.
Yeah, I agree. Visual, and again, I think for a lot of them, understanding cash in, cash out is either understanding a P&L report.
Yeah.
A lot of those times, so how am I so profitable but no cash in the bank? Or how come my revenue is this but I never collected? And so on. So cash is straightforward.
Yeah, exactly. All right. Okay, so let's go back into the questions. So again, so that this doesn't get lost in the chat, we'll address that one first. Yeah. So what is the monthly cost for us accountants and bookkeepers?
Okay, so I just want to see the same question. Is it in the Q&A?
No, the chat.
Sorry. Okay.
I don't want to get that one lost. So it's, yeah.
Okay, so first, so it depends on the package and number of clients. So our per company price is very low. I think USD for 3 companies for the Pro plan with all features and all reporting capabilities is 99 USD. And 15 companies, it's 199. I think 199, I hope I'm not mistaken, for the Pro one with all features. And you can connect 15 companies. So think about it, it's like, I don't know, less than $20 a company, or 12 or 14 bucks a company. And it's a new service line for you. And I think one of the problems, or one of the issues that I always had when I was an auditor, that when you provide great service as a bookkeeper, as an accountant, as a CPA, so if you do a great job and everything is according to what's supposed to happen, it's okay. But only when you give those insights or stuff the customer or client can see and sit down alone and understand stuff about his business, only then you can more appreciate the value out of it. So think about it's a new service line for you. So pricing is pretty affordable per company. So I won't talk too long. So this is a price for 15 companies, and we also have smaller packages. And for all of the participants in the webinar, we have a special coupon for them. Tanya, should I say it now, or do we have more time?
Yeah, you can say now. I will be sending it out when the email goes out, which will be, within the next 2 business days. So it's it might not go it might go either later tomorrow afternoon. I just schedule it for 2 business days, but it kind of tends to go after about 24 hours when I do that. So it'll go either this afternoon, or either like later this evening or sometime tomorrow likely. That will have the code there as well. But was it FINAD30, wasn't it?
I'll show in a second.
Okay.
Yeah, so this is a coupon. You get 30% off all monthly plans as long as you purchase it in August. And you get it for the entire year. So pricing, it's a great discount, only for the participants, and anyone who will get this email on all monthly plans.
Beautiful.
And I also want to mention you can start free. So when you finish the demo, by the way, we also have 7 days a week customer support. We have an in-app chat. You're always free to chat with us. We offer one-on-one training and demo sessions if needed. Simply go to the website and sign up. So 30 seconds from the minute you just sign up, you get the cash flow report that I just showed you. And it's done automatic. You tweak it a bit, you update the numbers, and that's it. You can share it with the customers or for your own business. And so this is a coupon. And I saw that you have more questions, Tanya.
Yeah, there's more for sure. Okay, so what types of software does this thing do? Is it only QBO? Because this one, Fiona, has companies that use Wave and Sage 50 that she believes would benefit from it.
Okay, so thanks. So Fiona currently we only support QuickBooks Online and desktop. I don't know if and when we'll support Sage or Wave. I think the next software to be rolled out will be Xero, but currently it's desktop and online. You can also sign up in the website and write the name of the software that you use. And once we release a version for the specific version, you'll be notified.
Perfect. Okay, so then Dominique has asked, is there a way, and this is, I guess, back to when you were still working with the scenarios, but is there a way that she can hold back a contingency amount for 1, 2, or 3 months of recurring expenses and remove that from the available cash flow? So
okay, so let me think about it. So for example, you have like 20K in the bank and you want just to extract 5K.
Remove that from the cash flow to keep in a contingency.
Yeah, so I would just do a projection on a daily basis of minus 5K, so you always adjust the cash balance of minus 5K for tomorrow. Yeah, so you can do that.
Okay, perfect. Okay, and then Marie's asked, can we add a line of credit with a specific limit? For example, 50,000 is potential cash into the company and have the actual balance on the line of credit in the bank, the QBO feed. But so kind of build that into the projection. So for example, the company's got a 50K LOC, so that's 50,000 potential cash, but the balance on it is 25,000, which means there's only 25,000 available to work with. Does that make sense? I read it exactly as it is.
I'm reading it.
Okay.
So the money was already pulled from the line of credit into the bank account. Is that right?
So if it's sitting in a line of credit, so it would kind of be available like as a credit card balance. So it's not pulled into the bank account. Well, I guess there would be a bank feed, so I guess it would show as potential available.
I think when you pull the 25K to the bank, it will, of course, update the bank balance because it's cash in. So I think that the question is, how should you reflect that you only have 25 open balance in the line of credit account?
Actually, I think I know where Marie's going with this. Sorry. I think that if we set up, so a normal line of credit, we would have set up as just as like as a liability account. It wouldn't necessarily, so if this is set up, maybe if you set it up as as a bank account, then that's what it would pull from, because it would recognize that as a potential balance if it's coming in as a bank account versus like as a liability or an asset, I guess, yeah, that would be a liability account. So is that right? If we kind of set it up as a bank account,
yeah,
then it would pull in.
Yeah, exactly.
Okay, but otherwise, if it's set up as something else, it wouldn't actually pull in because it wouldn't recognize it as cash as cash. Because again, you're working with cash in the bank.
Yeah, exactly.
Okay, perfect. Okay, so there's that. Yeah, Dominique says she really likes the customer insight reports. You can easily add AR ratios, such as daily sales outstanding. She's loving those reports. That's great.
Thanks.
Yeah, the bar graphs, pie charts, and dashboards with up to 3 ratios are really easy to understand. So, and she's the one who wanted the simple one, so that's awesome. We've got that. This is a great one. Do we get a free account? So if we sign up, do we get a free account for our own Pro Advisor?
Okay, so of course, when you purchase a plan for your customers, you get a free account for your business. We also have a free version for everyone. So anyone can start. We have a free version for everyone, which is limited, less features in the software. I cannot remember if we have a free account for accountants only once you sign up, only when you have customers on it. But anyway, we have a free version for everyone. And once you purchase for your clients, you get a free account for your business.
Okay. And then do we have a free trial of the full version? So, I mean, like if we just sign up just to test it out before signing up to pay, can we go in and actually play with it, for 7 days or 14 days with the full version?
Currently, no, because we have a free one, but you can, first we can do like a specific training or demo with your data, and you can see the full one. And if needed, you can just reach out and I will make sure you get one. So it could be arranged.
Perfect. And your contact information will be
it's also in the email.
The webinar email anyway. So perfect. Thank you. And then how would you best track a shareholder loaning cash flow? Again, it would have, from my understanding of what I saw, would have to be set up like a bank account to be able to pull it in.
So I have to. So Dominic, so first, when you got those transactions, if you got a loan or repayment, all of those transactions are reflected in your cash flow because cash in, cash out. You can set up a projection for those first repayments or payments into the company for the future. And again, it's always updated for QuickBooks. So anyone that extra transaction happens, it's reflected.
Okay, so I know like what we do here with a lot of, we have some clients who again are using it too much, like the piggy bank. But what we do is some of the accountants don't like to see a lot of that in and out. So what we do is we actually set up a cash on hand as a bank account, and then the clients, if they're putting money in or paying from their own cash, again, we just kind of use that, and then once a year we book it, we zero it out, or once a month or whatever we work out with the client, we zero it out and move it over. But if you were only to zero that out annually, then that would actually pull into your cash flow reports and you wouldn't have to use the projections.
You don't
consider cash.
So I showed you that you can choose, let's say, like 5 different bank accounts, and bank account A is the one that the shareholder use for loans. Okay, you can disable this account, and this account will not be reflected in the cash flow.
Okay, perfect.
So you can choose which ones are relevant for the cash flow forecast.
Awesome, great. All right, and I think that's it for questions.
Thank you very much.
Very engaged. That's awesome. That's awesome.
Thanks.
So, yeah, I know I've not used Cashflow Frog, but it was actually one of our boot campers when I said to them, I was starting to pull this together, and I said, here's the apps that kind of off the top of my head, who do you want to see? And I know, yeah, 2 of them came back and said, Cashflow Frog. So I'm like, oh,
That's
okay,
right.
that works. And that's awesome. Okay, well, thank you very much, everybody, for coming. Thank you so much for your time today, Ariel. That's awesome.
Thanks.
Perfect. So again, your email will go out within 2 business days. If there's any questions, just reach back out to me, and Ariel's information will be there as well too. Perfect. Okay. Thank you,
Thanks.
everybody. We will see you all next week. And Ariel, we'll see you on Wednesday.
Thanks. Have a good day.
Thanks,
Bye.
everybody. Take care. Bye-bye.